Welcome to this ICANN Media podcast. I'm your host, Rob Hislop. We are in Calgary for the Oil and Gas Awards Industry Summit. The session that just ended right now was called A Volatile Future for Canadian Importers and Exporters. One of the panelists joins us right now. His name is Ranko Berich, here with Monex Europe. Thank you very much for helping us out today.
Pleasure to be here.
So tell us a little bit, the title, A Volatile Future for Canadians, what does that mean to you when you hear it?
So I think the Canadian currency has really shown over the last 2 or 3 years that it's become increasingly linked to the price of oil. Always has been, but the correlation, particularly on dollar CAD, has become quite direct. And there's a number of reasons for that, which we discussed today, such as the financialization of oil. But the bottom line is that oil is such an important export to Canada that the Canadian dollar is more or less, at the moment, tracking the fortunes of crude oil. And the implication for that at the moment is that we are seeing a heightened period of volatility in financial markets. And that's driven by a number of things, such as changing monetary policy, an uncertain economic outlook in a number of important economies. But the bottom line is that that volatility has spilt over into an exchange rate that is obviously absolutely crucial to the Canadian economy.
So what does that mean then for the economy? Is this, obviously the dollar's coming down, but we hear out west, we hear that in Ontario this is great for manufacturing. So what does it mean to the country as a whole, do you think?
Right, so I think the Bank of Canada's Governor, Stephen Poloz, really has summed up the importance of the dollar to the Canadian economy. He's repeatedly spoken over the course of the last year how a strong Canadian dollar represents a headwind for the economy. So, back when dollar CAD was closer to 1, that was a major problem for the Bank of Canada, and they were perfectly happy saying it. Potentially even, happy verbally intervening in the exchange rate. And ultimately, Governor Poloz has gotten exactly what he wanted. He's gotten a weaker Canadian dollar, and it is a good thing because Canada's economy is very heavily export-focused, and a weaker dollar will absolutely help ease the negative shocks that we've seen in oil and commodity prices.
So ease the shocks overall, perhaps, but meanwhile, here in Alberta, people are struggling and losing their jobs. Is that just something that we have to just come to grips with, that this is the reality of the situation?
Yes, unfortunately, commodity prices are cyclical, and at the moment we are in a down cycle, specifically in oil prices. So I think the most recent few sort of releases of Canadian GDP show that the economy does have the capacity to perhaps redistribute some of that human capital and some of the economic capital to other parts of the economy, but the economy remains very dependent on external demand, so specifically in the United States. The United States is Canada's prime export market, but fortunately we are seeing very positive signs emerging from the United States. I think the economy is on track in the United States for either on-trend or slightly above-trend growth this year, and eventually that will filter through to Canadian exports, which is really what the economy needs right now.
Okay, and one of the questions that you were asked in the panel was, do you see any game changers coming up in the near future?
Yeah, absolutely. So I think interest rate hikes from the Federal Reserve are going to be a game changer for dollar CAD, or for global financial markets in general. But in particular, I think we could see dollar CAD be shocked back up sort of solidly into the 125, 128 range once it becomes clear that the Federal Reserve is preparing to hike rates. So that's sort of the big short-term game changer.
So how does this, I guess, downturn in the oil industry here in Alberta, how does it compare to past ones? Because, again, you've mentioned this is cyclical. We go through this all the time, but how does this seem to be compared to any of them in the past? Any worse or easier, I guess, to take?
So I think the thing that's been sort of quite surprising, and again, Governor Poloz, you probably realise I'm a bit of a fan of Governor Poloz, said it best when he said that the effects of this shock have been incredibly front-loaded. So that means that the plunge in oil prices was a lot faster than what we saw in previous downturns. So for example, 86, other periods of sort of low oil prices have happened more gradually than what we saw, where really it was in the space of a month or two, the price of oil halved. And thankfully for the Canadian economy, and I realise it has been a painful adjustment, the economy does seem to have responded very quickly to that. So I think as Governor Poloz said, the negative effects have been front-loaded. So that means that barring any future large downward shocks, the worst is probably over.
Okay. Thank you so much for your time, Ranko.
You're very welcome. It's a pleasure speaking with you.
We've been chatting with Ranko Berich with Monex Europe here on ICANN Media.